I'm here with Jim Cramer on the floor of the NYSE. He's answering your questions from social media. Jim, no surprise, so many questions about Facebook. I'll just sum up a few of them. Time to buy, better to wait. Do I take my profits? What do you do now with the stock?
Okay, the stock is inexpensive. There are always sell-offs that occur. If you haven't gotten in it yet, I don't chase. You'll get a sell-off. It'll be caused by the Fed tomorrow, maybe, and talk about how the Fed has to raise rates if the employment numbers go. Wait for that moment. But the stock is going to go to 120. I think rather easily. It's a huge position for action alerts. Why do I say that? Because I think that it can very easily earn $4 in 2017, and to give it don't give it a 30 multiple, ridiculous given the fact that it's growing at 41%.
All right, another viewer wants to know your opinion on ETP's earnings report.
We didn't like it. I'll tell you what we didn't like about it, because it's kind of, even though I know that you could back out certain things, they just boosted their distribution not that long ago, and that I felt was a sign that, look, they have total confidence, and then they can't pay for the whole distribution. So it's left us confused. I always hate to take a loss, but I have to tell you why would you raise your distribution and then not be able to cover it? What that means is you're going to have to finance it. It means you're going to have to sell a lot of stock at the market. It's not what I wanted. When they finished the deal with Williams, which is what we were in it for, and get the cash flow back, it'll be fine. But I was stunned and miffed that they raised the distribution when they shouldn't have.
All right, we'll switch gears. Kraft Heinz, thoughts on that?
Correct time. We got to see the quarter. I haven't done the work yet in terms of the quarter. What matters to me is that this company be 3G'd. When you 3G a company, whether restaurant brands or Burger King, what you do is you take out all the costs, and this company was just so heavy in costs. Kraft, it's going to be magnificent.
Two very different stocks, but what do you prefer for the long term, Pfizer or Intel?
Wow, geez, two very inexpensive stocks with very good yields. I think if Pfizer buys Allergan, I would vastly prefer Pfizer, because then they get Brent Saunders to run it, and I do believe that Pfizer is going to buy Allergan. I think it's going to be north of $380 a share, and that's why Allergan's such a huge position for action alerts.
How about Cisco? Should I take the profit and run, or is it still going to rise?
Very inexpensive. It's got a really good yield. Chuck Robbins is doing a terrific job. I suspect that there's a big spending cycle coming up for 4G around the world. They'll participate. I would not sell Cisco. And if the quarter's not that great, I'd buy more.
Is Walmart a steal at $58 a share?
No, it can't be. The company's basically told you, listen, we're not going to have good earnings for a long time. We have to spend to win. When you hear spend to win, that means they are underinvested. It means that they're going to have to spend billions. I don't even like the fact that they're doing the buyback. That's why I think the stock is where it is. They should walk away and use that money to be able to beat Amazon.
Jim Cramer, thanks so much. Remember, send your social media questions to Jim. He's on Facebook and Twitter. He's at Jim Cramer. Use #CramerQ. I'm Rhonda Schaffler for The Street.
To get more of Jim Cramer's investing ideas, as well as a peek at other stocks he owns in his multi-million-dollar charitable trust portfolio, subscribe to Action Alerts Plus. Sign up for Action Alerts Plus at getcrameredge.com. That's getcrameredge.com.